Absolutely right. The other thing that we've seen within Web3, which has been very new and not surprising, but surprising how fast, is how brands can come from nothing to, I don't know, Yuga Labs at peak was probably $14 billion, $15 billion in 18 months.
Yeah.
I think that was the fastest accumulation of brand value or corporate value I think I've ever seen. Looking through, I build Metcalfe's law models for network adoption, and I was just going through some of the models today, and one of the things that's been very interesting about this bull market versus 2018. I mean, I've been in this space since 2013, but 2018 we saw about 60-70% of the entire participants leave. So the active addresses went down. If you look at ETH, which is the best proximate for Web3, the active addresses have not gone down at all.
Yeah.
So they're staying. So the adoption builds on itself. So the next phase, that's what I want to ask you is, what do you think the next phase is? My personal opinion is it's consumerization of Web3. So that's what we've been talking about: music, NFTs, brands, and even where blockchain gets abstracted away and you don't really know, which is Reddit talking about digital, whatever it is. What do you have? Yeah, I totally agree. And, painful though these bear markets are, if you look from low to low, they're always rising. Just look at the Bitcoin chart, even when you take the low, and I took it from like 2011 low all the way to now, it still rises on average at 140% a year. So that brings me on to something you started the conversation with, is when you got into this, you were looking at the blow up of hedge funds in 2008, and you realized that they needed to grow up. I would draw a very close parallel with what's just happened to CeFi.
Yeah.
and the exchanges.
Yeah.
And we understand they are now going to be forced by both regulation and investors to become serious about how they run their businesses. And it's no longer acceptable to be the wild frontier. And I think this is a good thing.
I think so.
Because you get industry maturation, and that's when you can get broad adoption. I also think that, and I'm sure you'll probably agree as well, because we seem to agree on everything, is that because of what's just happened in CeFi, and because the user experience of DeFi is so crappy, the next phase is going to be a consumer DeFi experience that is usable. And so DeFi is probably due for another huge leg as it becomes a much more used system.
Look, the way I like to think of it, Raoul, is like, thank God, let's work on the back-end logic in DeFi and make sure that works before we worry about the experience. And I think now that we're really starting to shake out and find, the models that are holding up better and the rules that they implemented that allowed them to hold up better, I think now we're really at a point where the experience of it can be the focus. But I think that because some of this was such new thinking and such a new way of really democratizing the value of assets, all assets, right? I think that we needed to take this time to really kind of work through the business kinks. I like to remind people all the time, we are running a 365 24-hour a day, 7-day a week proof of concept in real time in the public domain. So all these blow-ups and problems and issues are completely transparent to everyone. But oftentimes that's all people focus on, and they're not focusing on all the business models that are running like clockwork through all these issues, and that are doing so in a way where you can watch every single transaction and see every single activity that they're doing on their platform. So it's such a different and interesting world, and people focus on one little part of it that's going wrong and aren't really paying as much attention to the vast swaths of it that are going exactly right.
Yeah, imagine if you real-time mark-to-market a VC portfolio of early-stage startups. We're going bust. We're going to be billionaires. We're going bust, right? And then, we've gone bust. They will have that. And that's what we're doing, as you said. It's probably the world's largest, biggest, deepest experiment in real-time business models the world has ever seen.
Open to everyone to watch.
And participate in.
And participate in.
I mean, it's an amazing thing. it's very interesting to see how businesses like Uniswap do compared to people like Coinbase.
Yeah.
I'm also getting interested in decentralized exchanges like Uniswap versus centralized exchanges like Coinbase. Both have their merits, but whether there's going to be a blending of these two business models or something, but it feels like out of this whole FTX fiasco, a phoenix will rise from the ashes. How are you thinking this through?
Yeah, I worry about the vertical integration of some of the centralized exchanges where they are incorporating custody into the same broker-dealer platforms and trading exchanges that they have. I just worry that, we've seen in the traditional financial world it's very important to have third-party and independent custody. And I worry that, it's going to be a real challenge, I think, for the centralized exchanges to have that radical level of transparency that's going to make people confident in their ability to really, be meeting the same service standard as decentralized exchanges where you're seeing every transaction flow through. So I think they have a challenge ahead of them. They may find very creative solutions, right? There's a lot of great and innovative people working at these centralized exchanges, but I think it's going to become an issue. And the regulatory rules as they get developed may actually even prohibit them from having certain parts of their business integrated as the way they do it today. So I think there's still some challenges ahead for the centralized exchanges that they need to really begin thinking about lessons learned from the traditional financial world here to reinstill confidence.
So one of the issues we don't know is that regulation is a huge problem because there's no regulatory clarity. And what we don't know is if in the worst case horrible scenario that Coinbase were to go under or one of these other exchanges, whether those segregated custody assets are legally segregated or not, or whether people have a claim on it.
Yeah, I think that this is the real point of uncertainty and the real issue with having a vertically integrated model like this, because it's not independent custody and it's not treated like independent custody. And when you are connected, when those hot wallets are connected for trading purposes, all of those funds are commingled for those moments. And it may only be moments, but if something happens in that period, I think there's not a lot of legal precedent as to where those funds really belong and who they belong to.
Yeah, that still worries me. And let's see how the industry evolves, because I mean, it's a known at least.
Yes.
One of the things I'm also getting interested in is the decentralization of asset management. I think that's the next phase. We're experimenting at Real Vision with how can we do this? How can we make crowdsourced portfolios? Do you need all of the infrastructure? Because it's so expensive to set up a fund, but you can spin these up on chain actually very effectively. And I think that's a big disruptor. How are even you at Franklin Templeton thinking through that? And what are clients thinking through this?
Well, I think that right now we're really trying, because we are a regulated entity and we believe very strongly in working with the regulators, we're trying to find pathways that we think take us from TradFi into these new assets and position us for what the next wave of models may look like. So right now, we're, I think, the only asset manager out with a multi-coin portfolio that we're offering as a model portfolio in a separately managed account. And each separately managed account that gets set up today can operate like a separately managed account. But in the future, I could see each of those separately managed accounts becoming its own NFT token, so a tokenized portfolio. And then you can start to trade the portfolio that has the model attached to it as a smart contract, and it starts to become a liquid asset. So I think that there's a pathway to take traditional finance. One of the most successful initiatives that Franklin Templeton has done is we've taken a money market fund, a government money market fund, FDIC insured, yielding 3.5% in the current environment. And we've tokenized that, and we're running the entire public set of books and records on a public blockchain. So, people are debating the stability of stable coins, yet what is better as a stable coin than a US money market fund? And if you can have a tokenized access to that, that suddenly becomes a new way of thinking about operating in the ecosystem that brings together the traditional financial and the emerging digital asset space. So we're very interested in mining those seams. And it's not quite decentralized finance and investing, but it's moving in that direction, and it's giving that portability and that usability of the investment portfolio as an asset, I think, to a broader set of participants.
You know, I saw another interesting one. We've seen people doing a lot with carbon credits and stuff on chain, but a good friend of mine, Lawson Steele, who's about the best single analyst in the whole space about carbon, he started a chain which is the actual EU carbon itself, the regulated EU carbon that all of the polluters need to buy, and that's come on chain and he's made it composable. So therefore people can then build businesses. So you could have streaming payments from Amazon pickups, you know, where Amazon trucks, they stream every time they go a mile and they buy carbon as their offset stuff. It's really interesting.
I love it. It's so creative, and it's such a great way of, again, taking the way that we live and turning the way that we live into investable opportunities. And I think that's really the future.
The other thing that I think is really interesting from the institutional space that I've talked about is ETH staking yield. ETH now becomes, you know, if you accept the currency risk of ETH, it's like a local currency bond, you've got a guaranteed yield essentially on it. And I feel like this sets the benchmark risk-free rate for Web3, and that you could, CeFi should have been its ETH plus 300 basis points, like we're used to from the traditional world of using LIBOR plus or Treasuries plus. How are you thinking through ETH yield, and what are your clients thinking about it?
So let me just say, stay tuned to that space, because I've seen some extremely powerful products that will, I think, fulfill exactly what you're talking about.
Yeah, I just think I think people have underestimated. So ETH was great because now it's a deflationary asset and all of that. But I think people have wildly underestimated how attractive it now becomes. Because, you know, you would go and see a client 3 years ago and you talk about Bitcoin. They're like, yeah, but I'm a pension fund. It doesn't give me yield. It doesn't help me towards my hurdle rate. And ETH does both. It's technology plus yield, plus it has a P of like 12 or something stupid, you know, so it kind of works because it has cash flows as well.
Well, and I think this is an example, Raoul, where we needed people who come from the traditional financial world to really enter this space and bring their expertise with them, because utilizing a benchmark rate and pricing contracts around a benchmark rate is something that there is a tremendous depth of experience around. It's just that depth of experience has not existed in the digital asset space. And now that we're seeing that expertise migrate, I think you're starting to see, you know, these ideas that really are the foundation of some of the most successful financial products ever created starting to migrate as well.
Yeah, it's really interesting. Alan Howard is a good friend of mine, and building up the Brevin Howard Digital, he took people out of the existing Brevin Howard Asset Management business, the hedge fund. He took the money market guys and the credit guys and said, right, go and figure out DeFi. Because they understand risk, they understand all of the things necessary, and there were so few people in the space who did. I thought it was genius.
That's ironic, because that's exactly what Franklin Templeton did. They took their credit people and their money market fund people, and that's really where we saw our digital asset unit emerge.
How funny, how amazing. So, institutional adoption. Where do you think we are? I mean, and how much damage have we just done to ourselves in this space? You know, talk me through where you think we are, the institutional adoption curve, and this damage, and how big a setback you think it is or isn't.
Yeah, so I think, again, I'm going to go back to my hedge fund analogy, because I think what happened in the hedge fund industry up to and post 2008 really is instructive here. So you remember that it was after the dot-com boom and David Swensen and the Yale portfolio came out that we started to see the massive migration of money into the hedge fund space. We saw almost $2 trillion in assets come in a 3-year period. So a huge influx of money. Interestingly, taking the industry to close to 3 trillion or 2 trillion of assets, which is right about where the digital space got to before the last collapse. And then what you saw was a real turnover of the underlying investment base. And what we're seeing now and what we're picking up on now in the digital asset space is this same turnover. We're hearing increasingly and seeing institutions replacing the retail money that's being withdrawn, and institutional money starting to account for larger and larger shares of digital asset holdings. Institutions are long-term holders, right? They wait for these kinds of wipeouts to come in and establish positions, and they will wait for the market to turn. But to be very clear, it's usually the most market-leading institutions that are really, looking to be very creative in their portfolios and who have really shifted to this factor-driven model and realize that this digital asset space is bringing in a whole new set of what we're calling crowd factors at Franklin Templeton that they have never been able to get exposure to in an effective way in the past. And many of the cultural assets we've been talking about really kind of illustrate these new crowd factors that can drive return streams. So that category of institution, I think, will be very excited and they will maintain and grow their investments. What will probably happen is that the next wave of institutional investors will follow that when the markets begin to turn and they see their peers really starting to make outside profits in these investments. That's when I think you'll get another big wave of institutional money coming in.
It's hilarious. It's like speaking to myself. So I mean, my thesis was you go through a blow up like this, and I use the hedge fund example, the post-Bernie Madoff fraud. What happened was not what people thought.
Right.
Post-LTCM, it wasn't the death of hedge funds, it was the acceleration.
And
because
the professionalization.
It was the professionalization and the absolute acceleration of institutional adoption that followed that. And so I can see a lot of people now on Twitter like, this is the end of it all. I'm like, no, actually, this is what you needed for the next phase because it's going to be much more investable. So yeah, it makes me laugh you saying that. Also, I say exactly the same thing is like institutions are price action followers, they're momentum in general. There'll be some who'll catch the turn and the macro will change and the turn will come. And I speak to so many of these guys and they've done the homework, as you say, they're all ready to do it. They just haven't pulled the trigger yet and are just waiting for that opportunity. But they've all got their custody, they've got their fire blocks or their anchorage, they've got their account set up, they're all ready to do something. They're just waiting for that turn. And I think that, suddenly what they thought of as a 3 trillion market is now less than a trillion market. And the fact that the more ETH you buy, the more deflationary it gets, it's going to create a very interesting cycle this time around.
And a cycle that may unfold a lot faster than people anticipate, right? Like even we're talking maybe 18, 24 months, we may end up being very surprised and people may really start, especially if the regulators can come out with some real rules that start to give people some confidence, this might happen much more quickly.
Okay, so the $1 trillion question is, okay, we've talked about the next 18, 24 months. That's a typical hedging of bets. Where are we, do you think, in the point in the cycle? So I'll give you my view is that I think we're at the bottom of the liquidity cycle. I think we're starting to see the rate of change of rate increases come down as inflation comes down, and therefore liquidity starts becoming less of a constraint because it's the rate of change that matters. And it's brought the markets down to that long-term exponential trend. So it kind of feels like we're right in the zone to me. How about you? Where do you think we are?
I think we're going through the last shakeouts. I always go back to Schopenhauer in these moments, and I love his quote that all truth passes through 3 stages. First, it's ridiculed, then it's violently opposed, and then it's accepted as self-evident. So I think we're coming to the end of the violently opposed stage where a lot of the skeptics are feeling very vindicated and getting very loud. And I think that that's a healthy thing, and that when it starts to turn around yet again and show resiliency, that's when we will get to the true acceptance phase. So I think we're, at a very interesting and important part for the marketplace. And I think there's tremendous rewards to be gotten for the firms that hold on to their commitment and continue to build and develop their efforts in this space.
Yeah, I just feel the risk reward from these levels is kind of ludicrous. You don't get it in any other assets. Final question. Have you managed to get your clients to get their heads around such a volatile asset class that a 75% drawdown is normal and you'll be more than amply rewarded by the returns? So, do they get that? They're now holders and they can hold this and understand it?
It's education, 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 right? That once they take the time to really get educated, I think they get excited and then they become committed. I've taken to asking people, what was your moment, right? What was the moment where all of a sudden the real potential of this space clicked for you? Because when you hit that moment, it really does change the trajectory of your thinking. And I feel like a lot of people will have that moment over the next 12 months. And I hopefully will be one of the people helping to get them there.
So takeaways are that this cycle is just another cycle, but the long-term adoption is going to happen in a way that is probably going to be surprising to all of us. The speed and the participation that's going to happen. We've talked about the cleaning up of the space and how that's going to open up for institutional adoption and is not going to scare people away, which is counter to the current narrative. She actually says, well, we've seen this before in hedge funds, and what happened is hedge fund became more investable. I think her ideas about asset management, how corporations can use tokenization, the tokenization of culture are all really big things. I'd forgotten about the way that corporations can unleash all sorts of intangible assets. And I think, yeah, of course they're going to do this. Why would they not? It's a huge opportunity. And yet that will be invested by institutions in ways that we don't yet understand. And the institutions themselves seem to be comfortable with the space, learning about it. And so many people are still coming into the space. They understand that there's something magical. And as Sandy says, is once you have that moment of understanding, you ain't never. They sold for millions and they were amazing things. But it was at that moment I realized, oh yeah, this physical digital thing is going to be even bigger than we think. Wow, I hadn't heard of that one. I need to look at that. The other one I've been talking about a lot is Ticketmaster. I don't know if you've come across the team at Ticketmaster yet. I mean, they've issued 10 million NFTs. They did a clever thing, which was when you go to a concert or a sporting event, Ticketmaster gives you a digital wallet to hold your ticket.
Yeah.
And they just made it Web3 compatible and then dropped you NFTs. It's like genius.
Proof of attendance, right? Remember how I used to at least collect and keep all of my old concert tickets.
I still have my Live Aid one here above me.
There you go.
I actually set up a whole business on this. I've co-founded a business called Science Magic Studios, where our objective is to tokenize the world's largest cultural communities. And we identified music, sports, TV, movie, book franchises, and fashion as the big cultural things. The other two would be politics and religion, but I want to keep away from those two.
Let's keep away from those.
It feels like fashion was pretty quick moving in this space. I'm starting to see movie and book, there's some really interesting. Ben Mesrich is creating a whole book. He wrote The Social Network and a bunch of other stuff. He's doing some interesting stuff by building a social graph from the ground up. So when you launch a book, but music has been slow. They've been experimenting, but there's so many problems with IP rights. How are you thinking of music and the tokenization of that?
Yeah, I still remember so many of those album covers and enjoyed having them and looking at them and touching them. And we really lost that with all the streaming music. So I'm happy that the NFTs can bring that back.
Yeah, but we have to get Spotify and or Apple, who are going to be slower, but Spotify they need to go into Web3 because, again, I've looked at this in great detail and